Today, spot Ether ETFs launch for trading in the US. We break down their fees and how many billions of dollars could flow into these funds. And Katherine Dowling of Bitwise breaks down why the asset manager chose to jump into the crowded field of spot Ether ETFs hitting the market. Welcome to CNBC's Crypto World. I'm Jordan Smith. A host of new crypto-focused ETFs are hitting Wall Street this morning, but the crypto market doesn't seem too moved. As of noon Eastern, Bitcoin slipped back to the $66,000 level, and despite 9 new spot Ether ETFs now open for trading, Ether's price has barely changed in the past 24 hours. It's trading at $34.55. Solana, which is seen as potentially next in line to have its own spot ETF in the States, is also lower today, down to $176. Now, like I mentioned, the SEC has given the green light to 9 spot Ether funds, something that many on Wall Street and in the crypto industry weren't expecting just a few months ago. Crypto World's Mackenzie Sagalos took a look at the fees these funds are charging and just how much money analysts on Wall Street think they could pull in.
The SEC has just given the green light for the first spot Ethereum ETFs to hit US markets. Those are now trading on the NYSE, CBOE, and NASDAQ. Fees vary, but just like the Bitcoin ETFs from January, Grayscale is coming in the highest at 2.5%. That's 10x more than the second highest fee being charged. Now, this comes 7 months after the blockbuster launch of spot Bitcoin products here in the States. Those funds have been breaking records, with $17 billion in inflows since January and $57 billion in assets under management collectively. Citi expects somewhere between $4.7 to $5.4 billion of new inflows for Ethereum ETFs over the next 6 months. Now, JP Morgan also expects flows to be lower than the Bitcoin offerings because Ethereum's market cap of $416 billion is roughly 1/3 the size of Bitcoin.
Everybody's trying to get a sense, but the important thing to keep in mind is that this is early days. We are 6 months into the trading of Bitcoin ETFs and 15 years into transactions on the Bitcoin blockchain. We are 4 hours into trading of Ether ETFs and 9 years into transactions on the Ethereum blockchain. And Bob, these are totally different use cases. So while Bitcoin is really known for its scarcity, its 21 million finite supply, Ether is a totally different use case. Ether is known for its utility. It is a programmable blockchain designed to let developers build decentralized applications on the blockchain ecosystem.
Another big potential headwind for adoption, the SEC isn't okay with staking Ether held in an ETF, which is one unique feature that Ether has over Bitcoin. So that perk, well, it goes away if you choose to get exposure through the ETF rather than the token directly. Relatively muted response in the crypto markets so far, but multiple analysts predicting that Ether has the potential to hit the 5K price threshold this year as institutional money begins to buy in. And a lot of attention turning now to Solana and whether that altcoin, which is worth $84 billion, is the next to get the ETF treatment.
All right, for more on spot Ether ETFs, I spoke with Katherine Dowling, the General Counsel and Chief Compliance Officer at Bitwise Asset Management, about the firm's own new spot Ether ETF and whether she thinks the regulatory and political winds are shifting to bring more crypto funds to US exchanges. All right, Katherine, the Bitwise Ethereum Fund has gotten the go-ahead from the SEC to start trading on the NYSE. I just want to start with your reaction to that decision from the SEC, because for a while, it didn't seem like these would actually go through. A lot of people are actually skeptical that these would start trading.
You are exactly right, Jordan, and thanks for having me back. Back in May, we thought it wasn't happening. There was silence, and I think ourselves and a number of the other issuers thought that it was just going to be quite a boring summer. And then suddenly the approvals came, and do not underestimate the political winds behind that movement. And then here we are midsummer, and today was launch day. So ETHW was born.
Get into a little bit about why you're launching this product into another crowded field of crypto ETFs. I mean, we saw with the spot Bitcoin ETFs in January, this rush to launch in. Why was this the right decision for Bitwise, and how do you see yourself differentiating from some of your competitors like Grayscale, which converted its Ethereum trust and maybe in the perception has a lead here?
Yes, well, absolutely. It's a great question. The why, well, Ethereum, Bitcoin, these are both great opportunities for diversification in crypto. And through the ETP product, we now have a regulated in your brokerage account way for folks to diversify, for financial advisors to be able to work much more closely with their clients, have a dialogue, and be able to have some controls over that. So it's efficient, it's less costly, it's safer, it's regulated. We should have had it a long time ago. Many other countries have been trading in these for a while now. So that's kind of the first instance. Also, with we're about 6 months after the spot Bitcoin launch, which was a landmark. This is another landmark. So today is a small step for ETH, but a giant step for the crypto asset ecosystem as a whole. Then to the second part of your question with regard to Bitwise, Bitwise has been going at this for a lot longer than many of the other folks who have been in the field. But first, the number of issuers coming out at the same time for both spot Bitcoin and spot ETH is actually great for investors. You have a very different scenario than when the Bitcoin futures came out and it was one kingmaker that is still a very expensive product, right? With a number of issuers coming out at the same time, I think that was actually the right move by the SEC because it allows for investors to choose among the various issuers, to look at cost, to look at what's behind from an operational standpoint. So from a differentiating standpoint for Bitwise, really what we do is we set ourselves apart as the crypto asset specialists. We are at heart a research organization. We have tutorials on our website for ETH, for Bitcoin. Our folks work very carefully with the RIA crew, financial advisors, to educate, to show them how Bitcoin, how ETH operate, how they're different. They're different types of assets. They offer different things. So we set ourselves apart by being that crypto asset specialist. That is our core. That is what we do. And then behind the scenes that investors don't see as much, behind the scenes is really important too. How you custody these products, how you also look at trading the day-to-day, the counterparties that you use, the specialty behind those nuances ultimately inure to the benefit of the ultimate investor.
You laid out your markers for differentiators for Bitwise. Now lay out your markers for success for this fund. Citi and JP Morgan both said that this may not get the same excitement that the spot Bitcoin ETFs do, but there is an appetite for these funds out there. So for Bitwise, what are your markers for a successful launch? Is it a specific type of investor getting in, or do you even have a number of assets under management?
Yeah, so we don't really have a set number of this is going to make it, quote, successful. What's successful is that it's out there, it's launched, and this is now opening the door for investors to come in a regulated, efficient, cost-effective way. So that to us is step one in terms of success. Two, we have seen actually a lot of volume already on day one here in trading, more than anticipated. The expectation was it's summer. There's a lot of noise out there politically, et cetera, in the environment. And the thought was also with Bitcoin, it's a bigger asset, bigger market cap, that the volumes would be much higher. But the spot ETH trading so far has actually exceeded some of those early estimates of trading volume. So that's another kind of near-term success metric as well. But long-term, it's really us as Bitwise continuing to work with our clients, which are the financial advisors and the RIAs, to continue to explain all of the products that we offer and to show how these can add to their clients' portfolio. And now we have some research out there as well right now on creating a crypto sleeve and having a diversification play between Bitwise, between ETH, and between crypto equities, and really making that part of your portfolio. So that's how we'll judge success in the long term, our ability to continue those conversations and to be a part of their research that they provide to their clients as they explain how these products work and how they can add to their clients' portfolios.
A lot of investors or people in the crypto space have looked to Solana as the next ETF or the next cryptocurrency that would potentially get an ETF. And correct me if I'm wrong, but Bitwise only tracks Solana through your index funds so far, correct?
That is correct, Jordan, yes.
So are you looking to Solana as another potential ETF that you might try to get listed on one of these exchanges? And do you feel like the SEC is receptive to altcoins beyond Ethereum?
Yeah, so the dialogue with the SEC has for Bitwise, we've always had an open communication about products. I think it's favored that you come in, you have a discussion with them about what you're thinking in the short term, near term, long term, because it helps the SEC to be able to prioritize what they look at and what they dig into if they hear from a number of issuers on potential plans down the line. So we've been encouraged. We've had conversations with the SEC about kind of what's next, what we would look at, what we would be interested in potentially launching. So I think it's helpful to both sides. So that, Solana obviously is one of those assets that we would be looking at trying to get out. The complexity from regulatory side is that historically with spot ETH and spot Bitcoin, the jurisdictional hook for getting the listing approvals has centered around the fact of the futures trading in these assets. So we will either have to come up with a new and novel or different grounds of attempting to get those products to market, or we'll have to develop more of the futures trading. And really that centers on the SEC needing to look to these markets to assure that there's not going to be fraud and manipulation. And the futures trading on a regulated market helps to assuage those concerns. So there will have to be some mechanism that the SEC would be able to look at and that we would be able to prove up from a research standpoint in order to push ahead with these products. So that will be a work in progress. That will be hopefully continued open lines of communication about what we're thinking, research we can bring to bear. We'll look abroad to products and how they've been trading as historical measures. So there's a lot of component parts that will go into getting the regulatory approval for products beyond ETH and Bitcoin. But it's something we are definitely actively working on, and I think it's going to be important.
All right, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.